back to the channel. Today we're going to be looking at one of my favorite stock. It's a stock I have in my portfolio, and in fact it's a consistent stock. It has always been in my portfolio, and I'm talking about the network giant Cisco. Cisco beat top and bottom. The stock is already up about 5% today. Cisco is saying that this earnings, Q4 earnings, is the second best quarter they have ever. Given all the inflation issues, bond yield, Fed increasing increment by 0.75 basis, recession looming, Ukraine and Russia conflict, with all the turmoil, Cisco did extremely well. Cisco CEO said demand is not their issue, it is supply, as demand continues to soar higher, given all the turmoil, given everything. So it is not about them not getting demand, it's about them being able to supply. For those of you who don't know Cisco, Cisco is a giant when it comes to networking. Even though these days you have more software companies doing subscription-based and cloud-based, but Cisco is still providing those boxes, those Cisco network gadgets that different companies use in their offices, the internal servers and network gadgets. However, with the way things are going, they may also now be looking at the subscription based one way or the other. But for now, with their own core business, demand is soaring higher and they are making bigger profit. Let's have a look at the details of the earnings. Here is a detail for Cisco Q4 earnings. Cisco top estimate on revenue and profit and gives optimistic annual sales forecast. This is on CBC. Cisco gave better than expected guidance for its full 2023 fiscal year. Management touted strong demand despite a volatile backdrop. Cisco issued fiscal fourth quarter result on Wednesday that topped analyst projection and provided a better expected forecast for the coming year. The stock rose about 4.5% in extended trading. Here's what you need to know. Apart from beating the earnings, top and bottom, when you issued a better forecast for the next year, for the next earning, it also helped investors have confidence in investing more in your stocks, or keeping your stock in their portfolio for longer than they might actually wanted to. That's why it's key to give a better forecast of your stock, but it is based on what you're doing, based on the earning. Here's how the company did. Earnings 83% per share, 83 cents per share. Sorry about that. Adjusted versus 82 cents per share as expected by analysts, according to Refinitiv. Revenue is 13.10 billion versus 12.79 billion as expected by analysts, according to Refinitiv. Revenue declined slightly in the quarter, which ended July 30th, according to a statement. Net income decreased by 6% to 2.82 billion as the company adjusted gross margin narrowed to 63.3% from 65.3% in the previous quarter. Analysts had predicted 64.7%. For 2023 fiscal year, Cisco called for adjusted earnings per share of $3.49 to $3.56 and 4% to 6% revenue growth. Analysts polled by Refinitiv had expected adjusted earnings of $3.53 per share, with revenue of 52.7 billion, or growth of 2.3%. In the fiscal 2022 fiscal year, revenue increased by 3.4%. While Cisco numbers generally topped estimate, the company is still struggling to grow as the technology world rapidly shifts from cloud and subscription software and away from buying physical boxes. The company, that was what I was trying to explain earlier. Cisco still deliver those network rack, the boxes where you have it in your office. These days, it's about cloud and subscription based. The company's stock price is down 24% this year, like many other stocks. Some are even down than 24%, while the Nasdaq has fallen 17%. Cisco top business segment secure Cisco top business segment secure agile network, which include data center networking switches, delivers 46% of total revenue at 6.09 billion, down 1% from a year earlier, but above 5.86 billion consensus from the analyst poll street account. The second largest unit, Internet for the Future, which contains routed optical networking hardware, the company picked up through its 2021 Acacia Communication acquisition. That was when they acquired Acacia. Kicked in 1.26 billion in revenue. You need to understand that companies can either grow by acquiring other smaller companies, or by revenue generation. Here it was talking about the Acacia Communication, which was acquired by Cisco. The collaboration segment featuring Webex contributed 1.16 billion in revenue, up 2% and above the 1.10 billion street account consensus during the quarter. Cisco announced a new video desk phone and broader availability of background noise remover software for its Webex video calling service. Here is more details about Cisco revenue. Um, Here it talks about the revenue 13.1 billion, and the EPS 0.68, that is gap. Non-gap is 0.83. The cash flow is 3.7 billion. Return to shareholder is 4.0 billion. 4 billion. Product categories and ARR presentation. Cisco will report its product and services revenue in the following categories effective Q1 full year 2022. Secure Agile Network, Internet for the Future, Collaboration, End-to-End Security, Optimized Application Experience, other product services. Let's have a look at its balance sheet. Here is the balance sheet and it's in millions. Current asset, cash and cash equivalent. This is the Q1, Q2, Q3, Q4. And you can see that at the end of the Q4, they have 7,079. Total current liability. Here you have 36,717,000, which is a little bit higher than last quarter, but lower than the second quarter of the year and the first quarter. Also, let's have a look at the total liability, the liabilities. You can see here you have total assets. At the end of the Q4, they have 94 million 002 on the total asset. Now here, total liability. This is liability and equity. Total liabilities here you have 54,229,000. That's for the total liability at the end of Q4. Total liability and equity you have 94,002, which is far higher than the um, the the Q3, but lower than the Q2 and lower than the Q1. Let's have a look at the technical chart for price action. Here is the chart for Cisco system. This is a daily chart. Let's go on the weekly chart. Cisco big top and bottom, and in fact, this is their best second best.
second quarter in their history. Now, let's start with the fundamentals here. The market capitalization is 201.66 billion. The shares in float is 4099.6 million. Shares outstanding is 4141.0 million. The EPS rating is 69. The PE ratio is 15. 5-year PE range is between 10 and 20. Return on equity is 35%. Cash flow not applicable, not available. These are the past EPS over the years from 2016, and then the guidance for 2023 and 2024. I mean, the estimate. Cisco here is a $48.70. The market is currently closed. The 52 weeks high to 52 weeks low. 52 weeks high is $64, while the 52 weeks low is $40. Cisco is trading minus 24% point two of the 52 weeks high. Let's have a look at the owners. Funds owns 41%, while banks 2%. The checklist, Peter Lynch, 5 out of 8. Warren Buffett, 13 out of 16, while Benjamin Graham's is 10 out of 13. The technicals, Cisco is trading above 10 weeks moving average, but below 40 weeks moving average. Let's have a look at the price action here. Cisco appears to be on a bullish trend, as we can actually see here. Let's see if we can draw here. It's That's a bullish move, as you can see. But then before now, it was also trending down, just like many other stock. Then the bear market environment, you know. But as we can see, it hit the level of resistance here, and then we are on upward movement here. But before then, Cisco has been a very consistent stock. It's not a volatile stock, and it doesn't really move that much. But then it's quite reliable. Let's have a look at it on a daily chart. On a daily chart, as you can see, Cisco was consolidating around there for some time between this area, 53 to 56 or so here. And then we have a downward move, which is also indicated by the moving average. This is 50-day moving average, and this is 15-day moving average. So we are currently trading above 15-day moving average, but below 200-day moving average. And there's a gap up here, as you can see. Like I often say, I prefer to have a gap down than a gap up, because it just means that this gap has to be filled, whether it is filled now or later in future. But then we will begin to see a bullish trend on Cisco. Like many other stock, we are still within the bear market environment. So, guys, be careful on the Cisco stock. Make sure you evaluate properly before you add this stock to your portfolio.
You have seen the details of the balance sheet. You have seen the details, the financial details of Cisco. They did well, no doubt. The best second quarter ever. However, before you do anything about Cisco, before you add Cisco to your portfolio, carry out your own analysis. Be sure that this stock is good for your portfolio. I have it in my portfolio. It's one of those reliable stock. I'm happy about it. But guys, carry out your valuation before you do anything about Cisco. Don't just buy Cisco because you watch it on a YouTube channel. Thank you for watching this channel. Thank you for subscribing. We will continue to produce content that will support your investment journey. Please call again.